Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. So right now you might be looking around thinking there's nothing to invest in the stock market because everything else has gone up so much since November. Everything is going to the moon, and you might be right, but there are some companies that are still undervalued. And what I would like to do today is share with you guys 5 companies that I genuinely think are good investments and have gone down quite a bit. So right now they seem actually either fairly valued or undervalued at the moment. Now, if you look at the S&P 500, you will see year to date is about 10%. If you look at the Nasdaq, for example, the QQQ, you'll see also up about 10%, 11%. And then the Dow Jones Industrial Average is actually down, up about 5%. So a year to date is not basically that bad, but is when you look at it for 1 year, okay, so 22%. So since this time last year, so it's up quite a lot. If you look at the Nasdaq, for example, okay, 43%, almost to 44% for the 1 year. If you look at the S&P 500, it's about 32% almost. So these companies have gone up so much in the last, especially since November. The S&P 500 has done absolutely amazing job in the last 6 months, 20% up in the last 6 months, 24% for this one, and for 16%, even the Dow Jones has actually done really well. So what I want to do today is basically share with you guys 5 companies. And if you look at the Fear and Greed Index, it's still basically, we're still in that territory. Recently, I think it went down to about 60 something. It's gone up, back up again. We're heading towards that extreme greed again because of basically the last couple of weeks, the markets have been, some companies have done really well. Some companies have actually stayed where they were. So what I want to do today now is share with you guys 5 companies that I genuinely think are good investments. Again, do your research, find out a bit more information. I'm just doing this for entertainment and so on purposes. So please like the video, subscribe to the channel. If you have any questions, let me know, as well as of course you join us in the Patreon account if you are able to, inshallah. Right, let's look at the first company. I want to make this video as short as I possibly can. And this is Exxon Mobil, 450 billion market cap. It has a moat that's narrow right now. Price is $113 per share. Dividend yield of 3.35%. The payout ratio is 39%, which is not bad at all. And the latest increase was 4%, which is fine. The 5-year growth rate of 3% and dividend streak for 41 years. Now they need to do this for another 9 years, and this company will become a dividend king. They're right now a dividend aristocrat, which is the companies that have increased their dividend for 25 years and more and are part of the S&P 500. The annual payout right now is $3.80. Safety is 80%. Profit margin about 11%. Return on equity of 18%. And return on invested capital of 17%. So the company is doing really well. And free cash flow right now is over $33 billion. Total return in the last 10 years, just 4%. Growth estimate for the next year is 9%. They're expecting some sort of a decline in the following 5 years. Morningstar saying right now it's about 15% discounted right now. $133 per share is where they think the price it should be. Right now, looking at the ratings from Wall Street, as you can see here, we've got 9 strong buys, 6 buys, and 10 holds right now, which is very, very interesting. Now, I would agree the holds. I would agree, with the buys right now. I don't agree with the holds because I still think this company has got a bit more upside, about 10% right now. I do own this company in the portfolio. So let's look at the earnings expectations for the next year. So decline this year, 7%, 5%. Okay. Same goes again for the revenue. A little bit of a decline there. Again, if the oil prices change, remember all these commodity companies depends on their prices actually depend on what's happening to that commodity. So it could bounce back straight away. Remember what happened in 2022. Right, the next one is Nike. This company is not doing well right now. So 153 billion market cap. It has a wide economic moat, $93 per share. Dividend yield of 1.58, payout ratio 39%. Latest increase was about 9%. 5-year growth rate 11%. Dividend streak of 21 years. Annual payout $1.48. Safety 99%. Profit margin 12%. Return on equity 29%. And 21% of return on invested capital. 6% in terms of free cash flow right now. $6 billion. And total return the last 10 years is about 11%. Growth estimate next year about 17%. Then about 13% every single year. 24% discounted right now. $136 per share is where they think the price should be. And now looking at Seeking Alpha. As you can see, 15 strong buys, 9 buys, 10 holds, 1 sell, 2 strong sells, 22% premium from where we are now. $115 per share is where they think the price should be. If we look at the earnings estimation for the next couple of years, that double digits every single year. And then again, revenue side of it is a little bit of a decline, nothing huge, but again, this company has been going through quite a bit of a crazy time in the last few. I think the earnings report last couple of days has not been great either. So for that reason, actually, do you know what? Let me actually quickly check how much is down just last week, because I think, yeah, about 5%. I think they reported recently, yeah, 11%. So that from $102 per share to almost it went down to 92, which is basically just around where it is right now. Next company we're looking at is CH Robinsons Worldwide. This is one of the companies we've not spoken about. Very small company, just about an 8 billion market cap. It has a wide economic moat. Price right now $74 per share. Dividend yield of 3.27. Payout ratio 76%, which is quite high. Latest increase was non-existent. 5-year growth rate of 5%. Dividend streak of 26 years of paying that dividend. $2.44 is what you get for every share. 80% safety. Profit margin 1.85. Return on equity 23%. Return on invested capital about 16%. They have just below $1 billion of free cash flow right now. Total return in the last 10 years, we're looking at about 6%, 26%, 23% growth estimate for the next year. Then a bit of a decline, 13% basically discounted right now. $85 per share is where they think the price should be. Right now it's about $74 per share. And the earnings expectations for this company, we're looking about basically decline this year, then 24%, then 10%, 14% after that, and then 5%, 2%, 2%, and so on. Now, the ratings where this gets interesting, okay? Seeking Alpha analysts is saying it's a sell, Quant is actually saying it's a sell, and Wall Street is saying it's hold right now. But Morningstar had a different idea, so that's interesting. 8% premium from where we are now, $80 per share is where they think the price should be. It's an interesting one. And the next one is one that I own in my portfolio. That's AstraZeneca, 205 billion market cap. It has wide economic moat, $66 per share right now. Dividend yield just above 2%. Payout ratio just to 40%. Latest increase in dividend is the 5-year growth rate. I don't trust basically simply save dividend when it comes to UK companies, but we just use it for this information. You can find out a bit more information if you go to Dividend Max for UK companies. Right now you get $1.42 for every share of this company that you own. Safety 70%, profit margin 13%, return on equity of 15%, return on invested capital of 15%. Free cash flow net basically right now is about $6.5 billion of free cash flow right now. Total return in the last 10 years 10%. Growth estimate for the next year 13%, then 13% every year after that. 15% discount right now. $78 per share is where they think the price should be. Right now it's $66 per share. Now looking at Seeking Alpha, if we go to earnings first, you can see double digits, okay, every single year. For this year they're expecting double digits, the next year 7%, 5%, which is really nice. Ratings, we can see, you know, a buy and then hold. If we look at the buys, let's see 7 strong buys, 4 buys, 2 holds, and no sells or strong sells. About 20% premium from where we are now, which is quite nice to see. And finally, we are looking at Rockwell Automation. This is $33 billion market cap. It has a wide economic moat, $286 per share. Dividend yield just above 1.75%. Payout ratio 41%. Latest increase was 6%, and 6% in the 5-year growth rate of 6%. 14 years of increase in that dividend. $5 is what you will get for every share. Safety 70%, 13% in profit margin, 37% return on equity, return on invested capital of 20%, and above $1 billion of free cash flow right now. 10% in total return in the last 10 years, 10% growth estimate for the next year, and then 7% after that. Fairly value right now, $309 per share is where they think the price should be. Rock is one of those companies that we have not spoken about in much lately, so let's go to the earnings and have a look at what's going on here. So flat this year, 10%, 10%, 21% for the following year, but that's only one person looking at it. So about 2%, 5%, 5%, 6%, which is basically what you kind of expect from this type of companies. And look at the ratings is old hold. Okay, let's go to Wall Street. 8 strong buys, 1 buy, 13 holds, 3 sells and 1 strong sell, and that leaves us with 2% upside from where we are. $292 per share is where they think the price should be. That's the 5 companies that I want to share with you guys today. There are some, companies out there, like, to be fair, I wouldn't actually touch this one here. It's a very small company, but there are Rockwell's. Well, this one maybe you would wait and list to see if it pulls back a little bit more, maybe goes down about 5 to 10%, and then that gives you a margin of safety. If you're interested in any of these companies, of course, do your research. But like I've always said to you guys, there are opportunities out there if you are looking for it, inshallah. And in terms of Sharia compliance side of things, these are where we are right now. So pause the video and have a look at that if you're interested, inshallah. I hope you enjoy this type of content. It takes a lot of time and effort to put these videos together. To be honest, my voice is all over the place today because I've got a bit of cold and my throat really hurts. So I just wanted to put this video out there for you guys. If you're enjoying it, please join us on the Patreon account, join us on basically the Discord, and like the video, subscribe to the channel. Have a wonderful day. Assalamu Alaikum.